Hello. Good afternoon.
Can you hear me at there?
ವಾಯ್ಸ್ ಕೇಳಿಸ್ತಾ ಇಲ್ವಲ್ಲ?
The host will be setting it up.
ಒಂದೇ ಒಂದು ಬಂತು, ಅನಿತಾ ಅನಿತಾ ಅಂತ. Can you hear me? Okay. How many of you are on the line? Madhu, one ನಿಮಿಷ ಬಾಯಿಲಿ.
See, they can't talk to you because there are a lot of people.
Yeah, you see, yes sir. ಅಷ್ಟೇನಾ? ವಾಯ್ಸ್ ಕೇಳಿಸಲ್ವಾ?
You can't hear them.
You can't see them?
No.
Huh?
You can't see them, I guess.
Yeah, ನೋಡು. Everybody can see and hear you.
It's audible.
It's audible, sir. ನೋಡು ಈ ತರ.
Just continue.
Shall I continue with my lecture?
Papa, in between, just ask them, are you there? Just confirm that they're listening.
Only 10 are there ante. Okay.
Okay. In between, later on, just keep asking if they can hear you. If they're listening to you, just check.
But ಅವ್ರು ಮಾತಾಡೋದು ಕೇಳಿ ನನಗೆ ಕೇಳಿಸ.
You can't hear them.
Shall I start the lecture? Good afternoon, everybody. I'm going to give you an overview of financial markets and financial institutions. Markets, you all know the meaning of the word markets. Market refers to a place where goods, services are exchanged, are bought and sold. That is the definition of a market. Markets need not have physical existence. Just like you go to a shopping mall or you go to a vegetable market or you go to a cinema to watch a movie. With the emergence of digital technology through internet, what is called virtual markets, virtual business have come into existence. Virtual reality, they have come into existence. What is this virtual business, virtual mode of doing business? A very simple example is Amazon, Flipkart, eBay, and there are many other online portals from where you can buy things without going to the shop. Using your computer or even your mobile phone, you can buy things and also make payments. There are so many online payment portals like Google Pay, PhonePay, Paytm, etc., so on and so forth. So when we talk about markets, we are not talking about a physical entity. We mean any place where goods are bought and sold, becomes a market. These days, the market for particularly services, you want to buy a book, you want to watch a movie, or you want to download something, etc. I mean, intangible services has grown by leaps and bounds as compared to uh, selling and purchasing of real goods. Let us come to financial markets. Financial markets refers to a market where financial assets or financial services are bought and sold. What are the types of financial assets that are normally bought and sold? For example, you are aware of shares, stocks of companies, debentures, preference shares, debentures, preference shares, equity shares are three very simple examples of financial securities which are bought and sold in a market. When I say market, take it for granted, it includes virtual market also. How are transactions done in a financial market? A very simple example. You want to buy a share of a company. To buy a share of a company, now you need to open a demat account. Is a compulsory. So you have to open a demat account, and you have to keep money in electronic form. That's your internet banking account. If you want, you can take the help of a stockbroker, or a dealer. There's a difference between broker. Broker is simply carries out your instructions and buys securities for you. Whereas a dealer, he has already bought the securities and he will sell it to you. So you have to have a demat account, uh, which is controlled, monitored, and supervised by SEBI, and that is Securities and Exchange Board of India. Then NSDL, National Securities Depository Participants. And also there are intermediaries. Carvi is one of them. Therefore, you can, if you are, conversant, savvy, smart enough, you yourself can open a security trading account and you can buy and sell shares or other securities. That's also possible. Then coming to other instruments like debenture, you can also buy and sell debentures. They're also known as bonds. There are several types of them. Normal, popular type of bond is a coupon bond. See, it is sold at a discount. Suppose the face value of the bond is 1,000 rupees. It is sold at a discount of 800 rupees. After 5 years, you get 1,000 rupees. It is payable at maturity and sold at discount. Even for this, you need a demat account. Another very, very important segment of the financial markets is the derivative market. Derivatives. Uh, you know, there are two broad categories of derivatives: futures and options. There are futures securities where you agree to buy or sell shares or even commodities, because commodity derivatives is also allowed in the Indian market, not to a very large extent. And financial securities like shares. In the derivative segment of shares, you have options and futures. Okay. An option is an agreement where you agree to buy a particular underlying security for a price, and on the expiry of the date, there is no obligation that you execute the contract. A call option is an option that gives you right to buy the underlying security. A put option gives you the right to sell the underlying security at a particular price. I'm not going into details of how these call option and put options are executed, because there is a well developed market on the national stock exchange, uh, and also the Bombay Stock Exchange for dealing with derivative instruments. So you have futures, forwards, that's also a type of derivative instrument, and options, wherein you have call option and put options. Now, these options come in innumerable varieties. There are what are called currency options also. So, let me not go further into it. Now, coming back to what is called financial markets. Now, financial market helps in channelizing savings in an economy to proper investment destinations. So, channelizing savings into investments. Savings could be from individuals and also institutions. Even companies may save and they may invest in the stock market. Individuals will also save. When it comes to individuals, individuals who save money have several options. The options are innumerable for an individual. You can put the money in a bank deposit or a post office savings deposit, where you will earn a fixed interest. Or he can, in fact, in India, most of the household savings go into bank deposits. SBI collects the largest amount of household savings in the form of deposits. That's why SBI is able to give crores of rupees of loans to corporates. Recently they gave 12,000 crores loan to Adani Group's new airport in Bombay. So in India, a lot of savings flow into banks. Though interest rate is around 7, only for deposits above 5 years, 8% interest is given. People still have confidence and faith, because so many companies have been disappointing in their performance, so much so that they have gone into liquidation and bankruptcy, and in that case, shareholders get nothing. Whereas there are companies, very well performing companies like Infosys, TCS, etc., uh, Tatas, etc., which have been able to give a return of 25% on share capital. 25%. Whereas if you put the money in a bank, you get only 8%. If you put money in a successful company, your return could be around 24, 25, or even more. appreciation could be more. You know that Adani Group, Adani is the fourth richest man in the world. He has overtaken Bill Gates. Bill Gates' net worth is $104 billion, whereas Adani's personal wealth is 115. In a matter of 3 years, the shares of Adani Group increased by 600%. So this market wealth you talk about is only notional. It's not real. If you go and ask Adani, where do you have $115 billion dollars, he will not be able to show you. It's in the form of share prices commanding a very high price in the market. So investors, savers, household savers think several times before they put money into shares or debentures or even mutual funds. Even mutual funds give a return of around 12 to 13 to 14%. There are some one or two exceptional mutual funds SBI and Reliance, I think, HDFC, which have given earnings of around 20% as compared to the interest one earns on fixed uh, deposits. Uh, Another option for the saver is to put money in real estate or in gold. Gold to attract people who have liking for gold. Uh, a new fund called exchange traded gold funds have come into existence. It's a type of mutual fund where you will be given units for the investments. It's attached to the link to the gold prices. It goes up or down depending on the gold price. You know that gold price has never come down. It has been going up and up and up. Gold prices. So individuals have several options. They may put money in a bank deposit, post office savings deposit, or invest if they are risk taking. Now I'm forgot to tell you about risk. See, risk attitude to risk of investors is a very important factor that influences their choice of investment. There are people who are risk averse. There are people who are aggressive and willing to take higher level of risk. People who invest in new companies, IPOs, etc., etc. And there are people who are moderate, people who don't like risk at all. These people will put money in the bank deposits or post office saving accounts. So, attitude to risk determines the investment behavior of savers. They can put money in banks, post offices, or in the stock market. Stock market, put in shares and, and debentures, etc., etc. And they can also put money in real estate because these days real estate prices are going up. uh, why real estate prices on a upward trend? The simple reason is that land is limited in supply, but the demand for land is growing. People want to build houses. They want their own houses. So this makes the land prices keep on rising, and people also invest. If they have excess money, they try to invest in real estate. Uh, Therefore, these are the avenues before an individual investor. So, financial markets help in channelizing funds from savers to investment destinations, depending on the risk attitude of the investors. Uh, Having said this, let me tell you something about these institutions, financial institutions. Now, institutions are extensions of markets. Or markets, for example, you see, you can buy and sell shares from your home, but not without the help of institutions like stock exchanges, like SEBI, like NSDL, like depository participants, etc., etc. And also, there are stock brokerage firms, for example, Oswald Securities et al., which will manage your portfolio. Portfolio means collection of assets. Portfolio management means the composition of the portfolio. Your portfolio normally consists of savings, cash amount, jewelry, shares, debentures, etc., etc. Now, if you are a what do you call HNI, high net worth individual, those who are able to invest upward of rupees 25 lakhs, what they do is that they go to a private equity, they go to a stock brokerage firm and tell them, entrust this 25 lakhs and tell them, I want you to invest in these companies. They'll do it for you. Okay, those companies will do it for you. These are also institutions, intermediary institutions. Now, a very important institution in the financial system of an economy are the banks, normal commercial banks, okay, which accept deposits, which give loan. Then you have a shadow bank called NBFCs, non-banking financial companies. Muthoot Finance, Manappuram Finance, Bajaj Finance is the largest non-banking financial companies. Some of them accept deposits, but most of them are not allowed to accept deposits. They are into the business of giving auto loans, personal loans, house loans, etc., etc. You know that house loan financing company, Diwan Housing Finance Limited, you know what happened to it? It's in default now. Okay, it has joined the list of large defaulters, DHL, and also Infrastructure Leasing and Finance Limited. These two are companies, infrastructure leasing companies that have gone into default. Then you also have, apart from in the banks, you have so many divisions. Normally, you see, there is a term called convergence in banking. If you go to ICICI Bank, there is one section which gives MSME loans. There is one section that deals with large corporates, loans exceeding 500 or 1,000, 2,000 crores. There is one section specializing in securities trading. They allow you to open a securities trading account. There is one section that deals with merchant banking. Under the same roof, under the same umbrella, bank offers a repertoire of services. Okay, uh, they give you house loan, they give you personal loan, they take money, they accept deposits, on demand deposits. Whenever you want, you can take back the money. They are into securities trading. They are into wealth management. Wealth management, as I told you, if you are a high net worth individual, if you have excess cash to invest, you can give it to them. They will take care of its investments. They also deal with large corporates, giving them term loans. There is a thing called term loan. Term loan is a loan which extends beyond 5 years time, up to 10 years. And it's a huge amount, 500, 600,000 crores payable over a period of 10 years in installments. And of course, it carries an interest also, term loans. So they give corporate loans, they give MSME loans. Now, MSME scheme is much in the news because the central government wants to promote MSMEs. They have also brought in what is called Mudra. That's just to refinance MSME. loans. I mean, the loans given by the commercial banks to small scale MSME enterprises will be refinanced by the by the Mudra, like that. So, uh, apart from the banks, okay, the mainstream banks, we have nationalized banks. We have seven now. There were a lot of merger and consolidation is going on. Biggest is SBI, and over some time they just want to have only five big PSU banks, public sector undertaking banks, five banks, because the government believes the policy is that larger the bank, less the chance of failure. There have been bank failures also. For example, Lakshmi Bank, this Global Trust Bank, etc., etc. They were all merged into healthy banks, consolidated, and taken over and made operational in the interest of depositors and also in the interest of the growth of the financial markets and institutions in the country. So as a result, now we have around 10, 12 banks in the public sector. And also the idea is to go forward and have only five large banks. That is the policy of the government. In addition to that, we have also private sector banks, ICICI, HDFC, then first there is one new first IDFC bank, then there are also Bandhan Bank. There are also banks which are specialized in giving microfinance, Bandhan Bank, etc. Like that. There is a variety of them. Then you also have cooperative banks, cooperative savings institutions, which are doing a roaring business. Cooperative bank, there are many cooperative banks who are earning huge profits. One thing you should know, during the lockdown period, 20 March to 21, 22, 2 year period, banking sector did very well. They earned profits. IT companies earned profits. Pharma companies earned profits. Steel sector did well in spite of high price. Of course, petroleum sector has been making super profits because the government jacked up prices. And now also in the last 6 months, they're getting crude at throwaway price from Russia, around $70 per barrel, whereas the market price is 110. They're making huge profits. So this is worth noticing. How come when the whole economy, the informal economy suffered, informal economy, low income, like people involved in trades, petty trades, hawkers, vendors, street hotels, roadside hotels. Even mainstream hotels suffered because of GST and because of COVID suffered. But these sectors, banking sector did well. This is a question for you to think over. So about these cooperative banks, I must tell you some interesting. They have made profits, huge profits. There are many instances where these cooperative banks, they have borrowed money uh, because I know, one bank borrowed money from State Bank of India at 16, 17%, gave a loan to its customers at 18, 20, keeping a margin of 2 to 3%, and earned a lot of interest. But is it correct? In fact, government several times has warned these cooperative banks of usury, USURY. Usury is a term used for very high interest rates. But ultimately, the burden of usury is transferred to the society. People out of their income pay more interest, and there is less amount left for their private consumption. So when interest rates are very high, borrowers suffer. They pay higher interest. So in order to make up for the loss, they cut down on their consumption. Right? Now, About this, what I call. So I told you briefly about the financial markets and institutions. Let me talk something about what is called capital market. What is a capital market? Now, capital market is a market for long-term funds. Example, share market is a very good example of a capital market. There is also a money market. Money market is a market for short-term instruments. Okay, like call money, certificates of deposits, etc., etc. But capital market is a market for long-term funds, which plays a very important role in industrial development, of business development in any economy. In India, capital market institutions are regulated tightly by SEBI. In spite of that, there are so many frauds. Okay, SEBI and also by Reserve Bank of India and also by National Security Depositories Limited and also by Ministry of Company Affairs. There are multiple agencies which oversee the capital market. In the capital market, you have what is called IPO market or new issue. In the new issue market, new issue means a company is selling its shares in the market for the first time. It's called a new issue market. It could be IPO or a new company that has come up. Recently, you are aware that LIC came out with an IPO. LIC is a statutory corporation. So far, LIC has not sold its shares to the public. It's a giant, okay? Nearly it generates every year a deposit. It collects premium of around 70 to 80,000 crores. The other small private operators, like there are so many of them private. There is HDFC, there is Nippon, there is Standard Life, HDA, etc., and so on and so forth. They are not able to collect so much of premium, but LIC collects around 70 to 80,000 crores business, lakhs of policies. Its performance is very, very good, excellent, because there are no complaints. The claims are settled smoothly and quickly in a time-bound manner. LIC came out with an initial public offer. They had high hopes. In an IPO, the price at which each share will be sold will be made known to the public. The price band is given. So LIC set a price band of 800, sorry, 900. There was oversubscription. People applied. Oversubscription means if there is, if 1 lakh shares are available for sale, 2 lakh applications are there. Okay, so successful, but now subsequently these shares are listed in the market. Now I believe the current price is around hovering around 700 rupees. So people who bought initially by paying 900 now have lost 200 rupees. This happens in the stock market. Okay. Similarly, Adani became very rich because the share prices of his group jumped 600% in the last 2 3 years. They have increased by three 600%. Thanks, Anita. You have given me some feedback. Uh, Therefore, this is what happens in a new issue market. Sometimes, the new issue market may not succeed. If you have studied your, fundamentals in your BCom or BBA or BBM degree, you will know there is what is called the minimum subscription. If the company doesn't obtain minimum subscription, it will not get the certificate of commencement of business. Of course, such problems are overcome by underwriting, uh, so that minimum subscription is secured and the business starts its a business. Now, once the shares are sold in the primary market, which could be IPO market or the new issue market, investors need liquidity. Liquidity is one of the essential characteristics of a security that shareholders expect from a security. That means they buy a security, shares or debentures. If they don't want to keep it, they should be able to convert that into cash. So to provide liquidity, we have secondary market. Secondary market consists of stock exchanges, mainly stock exchanges. Okay. For example, you have National Stock Exchange and Bombay Stock Exchange. Both are fully computerized, internet driven markets, very transparent, and no and also the settlement cycle is just one day. Today you sell, evening or tomorrow you will get back the money, get your money, and transaction is confirmed. Now suppose you sell 100 shares on NSE. You are selling it to the exchange. You don't know the buyer. So this is called the fungibility of transactions. Or you buy 100 shares. You buy it from the exchange. You don't know who the seller is. This is how stock exchanges work. Of course, recently there are so many complaints against National Stock Exchange, uh, because normally, one of the imperfections in a stock market is expected to be frictionless and fully competitive, free flow of information market. We call it ideal market, ideal capital market, frictionless markets, free flow of, there is no information asymmetry. All the participants have equal information. No information is, this is what we mean by information. And atomistic competition. Huge number of transactions take place, and you were one buying. Suppose you buy and sell Infosys stock, it will not have impact on the general price level of Infosys stock. It's called atomistic competition. It's an ideal capital market. But sometimes, what happens? It's not possible to maintain this atomistic competition or information asymmetry. That's what the recent scam in National Stock Exchange under the person who is in jail now, Chitra Ramakrishnan, happened. It's called the co-location scam. In this scam, some dealers, see, to participate at National Stock Exchange, you have to have dealership. Okay, you have to have dealership. You have to go through a dealer. Okay? Suppose you open a secure trading account, still you have to go through a dealer portal. Some dealers had access to price information on some security even before the stock exchange started its operation at morning 9 o'clock. They used this price sensitive information which they received earlier to their competitors to manipulate and make huge profits. This happens. This happens. Uh, so the secondary market consists of stock exchanges, and even for, of course, the derivatives market is a fully secondary market. There are no new issues. Only stocks and shares traded on the regular stock exchange are allowed to be traded on the derivatives market. Not all shares are allowed to be traded on the derivatives market. There is what is called a listing procedure for that. Now, for example, to list a particular security, if a company wants to list its share on National Stock Exchange, it has to sign what is called a listing agreement. Clause 49, there is what is called Clause 49 of the listing agreement, where certain restrictions are put on companies' governance structure. It says that you must have independent directors. It says that you must have women representation on the board of directors. You should have an audit committee. You should have an internal control, internal audit mechanism in your company. Like that, it puts a lot of restrictions with the intention of ensuring transparency and also to avoid frauds like siphoning of funds, etc., etc. But in spite of this, frauds took place at Satyam. Okay, the auditors certified that something is true, which was not true. The independent directors, there were eminent persons on the board, like one retired director of Indian Institute of Management, one retired professor of ethics in Harvard Business School, one top government official. In spite of that, fraud took place. Okay, these directors, independent directors, they were keeping quiet, drawing a salary of nearly 1 crore as the sitting fee per year. So all these things, in spite of the mechanism, happen. But by and large, there are reputed companies like Tata, like Reliance, Infosys, Wipro, where people have not lost money on their investment. Okay, there are statistics to prove that if you had invested 1 rupee, it would have become now 10,000 like that. Apple, Apple is a classic example. Classic example. I forget the statistics. Now, Apple share is trading around more than $100, and its market capitalization is $1 trillion market capital. More than that, it has crossed $1 trillion. Apple. It has huge cash reserves. Even American U.S. government doesn't have so much cash. Apple has it. Now Tesla is overtaking Apple. Tesla. So successful companies, they have very good, very high price for their shares. They pay dividend. They come out with bonus shares, etc. and etc. Then about the let me tell you briefly about what is called the Indian situation. In India, see, corporate sector is financed to a very large extent by the commercial banks. I told you already that all the deposit savings of the poor people, the middle class, the upper middle class, lower middle class category people, they flow into banks because they're not, they don't have the expertise to put in stocks and bonds. Because there are so many repeated incidents of fraud by these NBFCs. For example, there was a company called Manipal, Apex Corporation, which in which people lost around 300 to 400 crores. I'm talking about 20 years back, 80s and 90s. Then there was another Maharashtra Apex Corporation. There also people lost. Poor people, mostly the poor people lost. Therefore, people put money in nationalized banks, which is safe. But of course, you have to no risk but less returns. If you are prepared for that trade-off between risk and return, it's acceptable. Then, if you have any questions, you can type it to me. You can type questions if you want any clarification. So I have told you about financial markets. I have told you about financial institutions. Institutions. Yes. Any questions? Any questions? I want some questions. You see, I want to know whether you have understood because in the syllabus you have uh, 5 modules. The first one is banking. Second one is capital markets. Third one is money market. Uh, the next one is financial and banking institutions, then merchant banking. Now, about this merchant banking, let me tell you something. See, this merchant bank specializes in activities pertaining to the issue of prospectus by a company. A company which wants to raise capital in the market, because it will not get 100% financing from banks. Oh my God, you have not received bugs. No, I'm sorry, I don't have any notes because I'm giving extempore based on my 15 years of teaching experience in finance. And also, I went through several PPT slides available in this matter. They are not good. The quality of is very poor and inaccurate. Okay, please bear with me. Now, I was telling you about merchant banking activity. It's a specialized activity. When a company wants to, you might, yeah, you were asking about cash reserve of which company. See, I believe sometimes back, Apple had a cash reserve of some from some 500 crores cash reserve. Even Tesla has a huge cash reserve. Tesla, he wanted to buy, Twitter, and for $44 billion. I believe he had cash equivalent to half of that, $22 billion of cash. That's what he claimed. Elon Musk claimed it. I don't know how far that is true. Normally, cash-rich companies in the world are Apple, Microsoft, Google, Amazon, and Walmart. These are Coca-Cola. These are some of the cash-rich companies. The richest company is now, I believe, Tesla, followed by Apple, followed by Microsoft, followed by Google. Okay, because ultimately, what matters for a company, for a business firm, is how much cash it is able to generate. The cash flow or cash generating ability of a business is most important, not book profits. Book profits do not give an accurate picture of the success of a company. It is the cash flow, net cash inflow. I'm talking about cash inflow. Your cash outflow must be large, cash inflow must be small. Therefore, you have excess cash outflow or net cash outflow. That is what matters for a company, and that is what determines the share price like that. Now I'm telling you about this merchant banking. Now merchant banking, every commercial bank has a wing, separate wing to deal with the merchant banking activity. Here, as I told you, a company that wishes to sell shares in the market has to undergo a lot of uh, procedural formalities. First, it has to prepare a prospectus. Prospect is a detailed statement giving information about the directors, promoters, their background, and the business proposal. And also, very important, what are the risks attached to the business? You have to make a statement of that. First, a company has to file a red herring prospectus. It's called red herring prospectus with the SEBI. Red herring. Red herring means it's temporary. It can be revised. And then after fulfilling all the formalities of SEBI, uh, it is allowed to make an announcement to the public. Normally they do it through newspapers. You might have seen them in newspapers. Not many. You are not finding many, because that shows the the number of companies coming up is very, very low, which is different from what the government claims. Okay, there is no rapid industrial growth. In fact, after the COVID, or even for that matter, for the last 10 years, even before Modi ji came to power, there has been a decline in the Indian corporate sector. Here and there, you may find successes. Okay. But on the whole, the industrial development is not to the level expected. Now, merchant banking, I'm telling you, is a separate wing in the commercial bank. For example, in SBI, you have what is called SBI Capital Markets. It's a wing. It's a subsidiary of State Bank of India, SBI Capital Markets. Similarly, you have with Canara Bank. Now, a company that wishes to make the help take the services of merchant bank has to approach a merchant bank, and they do all the necessary spade work. You see, it has to appoint what is called market makers, and lead makers. For example, when a company lists its shares in the new issue market, somebody in the market, some broker should start buying, should buy, should make an application. Okay, they're called market makers. Okay, once the issue is over and the shares are listed on the stock exchange, the what you call the buying and selling should kickstart in the stock market. People should start buying and selling stocks. That is done by market makers. Okay, lead manager. They are also called lead managers. Lead managers. So that is done by a merchant bank. Okay, and also most important aspect of a new issue is that the probability of failure. Okay, people cannot think that blindly that it is going to the issue is going to succeed. It used to happen. Many companies which had no factory, which had no viable product, used to come out with issues and used to mop up money. It happened in '80s. Later on, things got the correction took place in the stock market. Correction, and such companies went out. People lost money. Arshad Mehta scam. During Arshad Mehta scam, even loss-making companies' prices started going up because there was no checks and balances. Vikrant Tires, which was incurring loss, went up to 37 rupees. Share which was being sold at 7 rupees went up to 37. Then after the exposure and the collapse, it came down to 2 or 3 rupees. People lost money. So to avoid all these things, government has created a process, a regulatory mechanism through merchant banks, and and the idea is that there should be less information asymmetry between the investors and the promoters. See, the problem is promoters have more information than the investors, than the share buyer. He knows whether his company is going to succeed or fail. He knows. But he will not share all the information with the investors. Now, it is the job of these intermediaries like merchant banks or commercial banks to advise investors against investing or not investing. For example, I advised many of my friends not to invest in LIC IPO, but they did and lost. So, this is the function of merchant banking. Merchant bank is not a separate entity; it's a division within a commercial bank. There are also separate, merchant bankers, but normally they are the popular ones are those which are part of nationalized bank. Yes, questions? Yeah, like HDFC Bank and HDFC Securities, Kotak Bank. Yeah, you are right. They are examples. Okay, no, actually, these HDFC securities and Kotak securities, they are, you can call them brokerage firms. They offer you facilities of trading. And also, as I told you, if you put money, entrust the money, if you, they will do portfolio management for you. Mutual fund is a portfolio. In other words, what happens in a mutual fund is that they diversify risk. Instead of putting money in one share, they put your money in hundreds of shares. For example, National Stock Exchange is an index. Sensex is an index where the portfolio consists of only 30 securities from different sectors. 30 securities. Nifty is also 50. Standard and Poor 50. It's a portfolio of 50 securities. Now, 50 securities means, uh, the, for example, Tata, they will put only 3% of the investment in Tata. Infosys, they will 4%. SBI, 5%. Like that, they distribute the corpus fund. Let us say it is 1,000 crores of rupees for a mutual fund. They distribute that over 20, 30, or 40 securities, so that risk is diversified. The idea of a mutual fund is to diversify risk and give you maximum return. Instead of putting all the eggs in one basket, you put it in different baskets, so that even if one security fails, it will be, its loss will be made good by other securities. This is called portfolio management. Yes, any other questions? I'm waiting for questions. Yeah, I'm waiting for questions. No, no more questions. Hmm? Have you been able to understand little bit of what I have said? Thank you. Huh? Yeah. Yeah, you can go through. You see, in the newspaper, you get business line particularly, you get details of Nifty and Sensex. You can, update yourself. Okay. And also, there you get details about call prices and index futures. There are what are called index futures, which are very popular. Okay. Liquidity, no, 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 no. Liquidity and bad management. A bad management means the company will be bad. No question of liquidity. Okay. Liquidity presupposes good management. Good management is the foundation. But one thing, even if management is good, some companies do not do well because of market adversity. There may not be demand, like many hotels suffered during COVID times. Okay. Good management is essential, but it is not everything for business success. Right. Okay, I think uh, that's all for today's lecture. Okay, right? Okay, bye.